Hey guys, hope you are all having a great day. Today we watched the GameStop and AMC price sink, even after that fantastic run they enjoyed in the after hours yesterday with the big GameStop announcement. Though no particular announcements were made today, an interesting article came out by no other than the worst financial media magazine, Forbes. After an agonizing reading that left me with serious traumatic brain damage and long-term impediment, I will gladly summarize what was said and talked about. We will also briefly talk about markets and what has been taking place as of late. Quickly, let me invite you over to my Discord. We have tons of things happening there as well as some of the best day trading alerts out there. Today we had 4 alerts and all were successful, with one particular entry that ran beyond 7% after the alert was issued. If you are looking to get day alerts on the best stocks to day trade to enhance longer positions, join the Discord. Links are in the description and a pinned comment. Before we begin, let me quickly state that I am not a financial advisor, and that all content discussed in this channel is simply information gathered that I deem important for people to know, so that they can make informed decisions. All efforts are aimed to better understand the nature of the current market in anticipation of the greatest squeeze in financial history. Let's dive right in. So let's begin with the Forbes, who today published the most cringe take any news media could have had to date. I grew up in a world where we were children of mutually assured destruction, as it was get under your desk to brace for the impact of a nuclear blast. This is a direct quote by Griffin, who Forbes tries so hard to make relatable. Citadel supposedly gained 26% in the year 2021, cited Forbes, with Griffin personally taking $2.5 billion to add a total of $27.2 billion to his entire net worth. Griffin talks about how the current events in Ukraine are the giant unforced error by mankind, but Forbes jumps in to say that this is short-term thinking, and that Griffin sees a flock of black swans looming. You see, the main point of this whole article was to sympathize with Russia and their genocidal crusade in Ukraine, because as Kenny puts it, the Western powers have shut off Russia's access to capital markets, heralding the weaponization of the dollar. He says the severity of the sanctions will have long-lasting impact on the dollar-based global financial system. After this crucial statement, which would need to be backed up by some data or rationalized at best, Forbes decides to skip all that and instead begin a biography on Griffin, citing him as a man whose destiny always lied with that on entrepreneurship. He was the math club president and he went to Harvard and then he had $1 billion by the age you got your first job and so on. This is all a glorified glory hole which makes subtle remarks to make you feel less than adequate for not being a succulent billionaire by now. The article skipped and completely forgot the entire premise of the beginning of the story and instead focused on what Griffin thinks is the key to success, which if you want to know, he says it's an obsession with candidates. The article applauds his philanthropic endeavors like donating $50 million for vaccine developments and related programs. Forbes loved to mention stimulus checks as driving the current crazy inflation while ignoring the fact that most of the money went to the pockets of companies who used the funds to pump their stocks into the moon. And yeah, that was all this was. The article started an interesting premise, abandoned it after 2 paragraphs, went on a tangent to suck off Griffin and attributed nothing but brain cancer for anyone who read it. Bring attention back to the markets. Stocks finished higher today. All 3 benchmarks ended green, completely devoid of the worsening market conditions that have accentuated the expectation and likelihood of a big recession looming. You see, while markets were celebrating a green day and Jim Cramer telling you what is the next hot stock to buy after Facebook, red sirens were running rampant at the Fed. The yield on the 10-year U.S. Treasury bonds ended the day at 2.38%, 6 basis points below the 2-year U.S. Treasury yield of 2.44%. In case you skipped my big video explaining this phenomenon has a very accurate and strong record of predicting recessions. Each of the last 8 recessions dating back to 1969 were preceded by the yield on the 10-year falling below the 2-year. Things continue to get uglier while markets continue to rally greener. Miss me with the farce hood of this pumped market. I can literally only invest in meme stocks. Let's talk about today. The Fed submitted over $1.666 trillion in reverse repo operations today. Dark pool trades for AMC accounted for 56% of the total volume today, while dark pool trades for GameStop accounted for 56% of the total volume today. AMC had a larger amount of buy orders than sell orders, with GameStop also having a larger amount of buy orders than sell orders. Now, let's talk about performance. AMC had a bearish day, losing over 5% for the day. It began selling off in the pre-market, and once markets opened, AMC began to sell off rapidly. It continued breaking resistance until it sank under 22.50, where it experienced a mild bounce, closing at 23.30, below the VWAP. These major sell-offs were going to happen. Meme stocks were running big time and had a lot of day traders and non-investors playing, so a lot of people are going to be collecting profits and the stock will sell off as a result. This was due to happen, and those short involvement is obvious. It was also bound to retrace as well. Stay zen. I will make a video on Sunday talking about what I think is likely to happen next week. GameStop had a bearish day, losing under 1%. After a massive run yesterday in the after hours, GameStop was selling off big time today. The pre-market performance was very weak, and once markets opened, there was further accentuation of a sell-off by all the people that jumped on board. GameStop found some consolidation at around 172 but gave up support and sank to 156 before a small bounce that had it close at 165. As I said, I will make a video on Sunday talking about what I think will happen next. Thank you all so very much for making it to the end of the video. Let me know your thoughts down in the comments below. And most importantly, remember to come join my Discord. If you want to support this channel, I have a Patreon link in the description, as well as some one-time donation links for Cash App and PayPal. Thank you again for being a part of this channel. I will continue striving for better content. Enjoy the rest of your day. Keep on buying the dip and to the moon.